Hello again, this is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Monday, the 17th of July. We're halfway through July and we've got market setting records. We'll talk about that as well as several other topics that are moving markets or concerns that the markets see on the weeks and months ahead. So let's get right to our topics of the day. So our first topic of the day, what markets are concerned about and paying attention to, essentially politics as usual, right? What else would there be? You have Speaker of the House Nancy Pelosi and President Trump now playing another political football game, and it's not about the extension of unemployment benefits that's much needed as a CARES 2.0 Act or small businesses that need assistance right now. Forget about them. They basically said, let's put them on hold right now. And unfortunately, they're going to go after the U.S. Postal Service, and that's sort of their rag toy, if you will, if on the playground. They're going back and forth with this. That is going to be in the forefront of concern as it relates to markets, simply because it calls into question the authenticity of an election. They're using the U.S. Postal Service as an example today. It could be mail-in votes tomorrow. All the while, if we get a delay or a contested election, it's not uncommon or uncalled for or unquestionable, because we had that in 2000 with Bush and Gore, and remember Miami-Dade and hanging Chads back in, it was now 18 years ago, 20 years ago, if you will. So it could happen, a contested election, or going all the way to the Supreme Court. And you know what? Why wouldn't it? Because today, right now in this year, 2020, seems to be going that way anyway. So markets are going to paying attention to this, as we are here at Blanke Schein Wealth Management, because it is cause for concern. It will add more volatility, and it will be, something that we're going to have to navigate through in the weeks and months to come. So as long as this is a headline is going to continue to persist, we're going to continue to cover it. So we're watching today the S&P 500. If it can close above the 3386 number, close above that, that's setting an all-time high for the S&P. Now, remember, NASDAQ did it earlier this year. S&P is closely behind. I think we can do it. If not today, it'll be definitely this week, I think. And then we're going to see probably the Dow follow suit. Essentially, a lot of these indices tend to trade together, especially when there's upward momentum. So right now, the trend is your friend as it relates to the markets, S&P. And on the side note, Goldman Sachs, as well as other Wall Street sell-side research firms, are now raising their estimate targets at year-end for the S&P 500. In fact, they basically went from 3,000 to 3,600 as of right now. What that ultimately translates into, because more firms are following suit, actually, they're in the middle of the pack. Other firms have already addressed this earlier this year and raised targets for the S&P 500. That being said, that just means that there are earnings, right? The earnings are there in the S&P. So will the S&P hit a new record today? Well, as we film this broadcast right now, we're really in a stone's throw away from the S&P 500 basically breaching the 3386 mark. If we close above that, that is an S&P 500 all-time high. We saw that earlier this week or this year with the NASDAQ, actually breaking several highs on a go-forward basis. We should see that S&P maybe this week, maybe today, maybe tomorrow, but inevitably the trend is your friend. And that being said, the Dow Jones Industrial Average might not be too far behind. It's got some room to grow and catch up. But the reality is that what we're seeing is the economic data that's coming back in play, the earnings that are coming and being reported are all better than expected. Ultimately, you get firms like Goldman Sachs and a few other Wall Street firms earlier this week just raised their S&P target from the 3,000 mark to 3,600. Well, we're already past the 3,000 mark, let me tell you, Goldman Sachs. So that's a good call by you as it relates to now your year-end target for the S&P 500. All that ultimately means our earnings and corporations are growing, and that's a welcomed sight as it relates to these markets staying where they are and going higher on a go-forward basis. But markets are paying attention to the S&P 500 today and see if it can close on an all-time record high. We'll wait and see. So let's go to our final topic of the day, the NBA and testing. The NBA has tried an experiment down in Orlando by playing in a bubble and ultimately quarantining the entire group, team, staff, and so on and so forth so that they can continue to play. One of the components in the protocol is a Yale saliva test that they've started. And essentially, ever since they started this, it provides accurate, cheap, real-time, like hours, not days, in terms of testing. Well, the FDA just approved it for mass use overnight. And essentially, this is a quick, easy, accessible, real-time game changer in the war against coronavirus over the last 6 months. You know, you have over 500 trials that are happening around the world. As I said, it's a unified front. For one thing is to bet on the coronavirus. It's another thing to bet against it and see all of the science and technology around the world in a unified fashion come together to try and sort of, you know, beat this thing. Well, tonight or this last night, there was a huge breakthrough. Why that matters most is what the economy is looking at, what the earnings are looking at, what the markets are looking at, is that we can reopen. We can live with this virus. This is not something that's going to go away because we have a vaccine overnight, even though we've got a lot of people, a lot of quote shots on goal that are trying to work on that direction. And I firmly believe at some point in time we will see something. But in the meantime, we have the economy that can reopen, and this is evidence as to. One of the great litmus tests here as to reopening is if the NBA didn't do what they did and they didn't seek out extra sort of outside the box of what has already been approved by the FDA, you know, even a month and a half ago, 2 months back, when they crafted this crazy plan to go down in Orlando and reopen their season, we would never be here right now where the FDA said, yeah, this Yale saliva test actually works and actually does a really good job. And it's cheaper and faster than what we're seeing that you and I could get as we do a drive-through and get 2 weeks later we get a phone call. So again, another evidence as to why we need to reopen safely and thoughtfully, but that also pulls through technology. It pulls through science that basically forces the shot clock even faster and harder and quicker to actually work round the clock to get something done. Now you can take this to the NFL, but more importantly, it's not about sports right now because ultimately no one's watching sports. I know I'm not personally, so it's really irrelevant. But what's relevant about the sports right now is that the fact that they can reopen successfully and safely, and this means a tremendous breakthrough that the FDA has basically now approved this for everyone. So this is a thing that the markets are watching as it relates to earnings and reopening of America. So the NBA, in a sense, has helped accelerate this war on Corona and score one for reopening and score one for humanity in this case. So thanks for watching. Enjoy the rest of your day and have a great day.